Okay, it's safe to say we have the quorum to begin. Good morning, good afternoon, good evening to everyone from wherever you're joining us from. We welcome you to the first session of AESIS 2025 virtual program. My name is June Mkangula. I am in charge of pre-summit events at AESIS. And we are thrilled to have you for this discussion on the topic Behind the Curtain, Investor and Founder Real Talk. We are going to dive deep into the Africa early stage investment ecosystem conversation, and we are going to get deeper over the surface level kind of talks. And at the end of the session, we'll now ask ourselves, where do we move from here? And such impactful conversation will continue at ACES 2025 in Cape Town at the end of November, and would be very thrilled to have you there. But before we start, I would love to know where you're joining us from. Myself, I am joining from Nairobi, Kenya. It's quite cold. I would like to know where you're joining us. Feel free to put it on the chat. I know others are in summer and we can only envy. I am green with envy, so feel free to share where you're joining us from the chats. Let me see where people are joining from. Um, there's Dar es Salaam, Tanzania. We have London. It's hot. Quite nice. We have Nairobi. We have Malawi. We have Cape Town. Uh, many places. You can see Nigeria, Lagos. So we are thrilled to have you, and feel free to leave the details of your profile so that we can be able to engage and know one another. And I just want to walk you through a very quick agenda of the session. So first, we will talk about what to expect for ACES 2025, what has changed, why would want to meet with you in person in Cape Town this November. And then we will now get into the round table discussion with a premiere of our speakers today. We'll be able to get what they're thinking. They're standing also in the ecosystem and with their garnered years of experience in the ecosystem as well. So we will gain deep expertise. And then now we'll go to the announcements. I have a gift for those ones who will be here at the end of the session and closing. And without further ado, I would love to welcome Yao, who is our head coordinator for ACES 2025. Yao, the floor is yours.
Geez, head coordinator, that's a bit of a title, but thank you. Hi. Uh, Thank you so much for taking the time to be with us. Just by the mere fact that you are spending your time with us means that you're invested in some way. And so we don't, well, I definitely personally don't take that time allocation as for granted. As June mentioned, my name is Yao Pepra. I was born in Ghana, raised in South Africa, and I'm currently living in the Netherlands, Amsterdam to be particular. Um, at the beginning of the year, I was fortunate enough to join VC4A, who I think many of you know. And together with ABAN, they've been putting this Africa Early Stage Investor Summit together for this is going to be the 12th edition. And hats off to those who made up them, who decided that this is very necessary. Because as you know, both agencies are not conference organizers. This is part of what they do to make sure that the ecosystem reaches the potential that it could. And so in 2014, when they came up with a bold idea of African startups where they just don't survive, but they thrive. I mean, that's a great concept, right? And I mean, what if capital actually just flowed not to Africa, but through Africa, building wealth, ownership, and power? I mean, that idea in my mind holds stronger now more than ever. And I honestly start feeling that things are afoot. I mean, if you watch what's going on in West Africa, for example, and also the rest of the continent, how we are trying to see, okay, cool, how we can use our resources to help build our people and our resources. And so through that, hopefully we become part of the ecosystem instead of being a place where it's just really generally extractive and we're always just trying to just always chase, you know? So 12 years later, now we gather in Cape Town for our 12th edition. This growth isn't, we don't want it to be just explosive. We want it to be enduring. It's not going to be like a one-hit wonder. We don't want it to be one. And so the idea with this conference, hopefully, or the summit, is to get people like-minded, but also not like-minded, because there are people that aren't investing in Africa. Why aren't they investing in Africa? What is the problem? What narrative do we need to help shift? You know, how do we help shift these narratives? You know, So I mean that's part of the thinking of what I believe we're trying to achieve with this one as well. And we just are looking at how the dynamics in terms of international funding coming in has changed and how we can also just start and build our own thing. Hence why the title, which I missed initially, is Africa Built to Last, you know. So capital with teeth, not just access, but ownership. Innovation with roots, so how AI, climate tech, but not making it a standalone topic, but integrating it into everything that we need to do. And then growth with grit, scaling, not just about money, but partnership, policy, patience, and just making sure we build together. Do you mind moving to the next slide for me, please? So the thinking behind the summit. So there are the main 2 days are the 27th and the 28th. You start off with a breakfast. You get to catch up with some of your old colleagues, some people that you've been speaking to more often than not. You interact with some founders that have managed to turn 50 into big ones, some that haven't, some are still trying to learn. And the next day we generally have, and then that's followed by an award ceremony, but I'll talk about in more details about that later. And then the next morning we have like a deal sessions where we have a whole lot of companies potentially pitching. And then at the end of it all, you generally with a Rolodex full of ideas, exchanged potential new businesses and partners moving forward. And I'm condensing it into a nutshell, and I'm trying to speak fast because this session isn't about me. It's about trying to learn more about what we're trying to do. So please forgive me if I am speaking a little bit too fast. But I'm so amped for this, and I'm hoping the rest of the team are in terms of what built to last really means, you know, and are we ready to do it? Next slide, please. Am I able to do this myself? No, I'm not. So yeah, so right now we ask you to just join us, have a seat at the table. I'm my current role is just helping VC4A on in terms of putting it together because this is in partnership with ABAN and VC4A. So my role is with VC4A, but I've also taken on the role as partnerships. So I would love to hear from you in terms of how we can partner to make this event sustainable and also relevant to what your needs are. So my details will come up at the end of the presentation, and I would love to hear from you as well. Next slide, please. So just a quick overview. This is a very short snapshot of what the event will look like. So I mentioned the main two summit days are day one and day two, which is on the 27th and the 28th of November. As you can see for yourself, these are some of the things that we planned at the moment. And also, if you've come up with an idea, you've got a research report, you've got something that is earth-shattering that needs to be out there that people need to hear. We've got a pre-summit, we've got it on the 26th, we've got a pre-summit day which we set aside where we can have workshops that help you, I guess, convey your message and how that message can also transpose into what can be done actionably for LPs, family offices, others, all the ranges of investors along the spectrum. And then on the day of the summit, at the end of day one, I mentioned we have an awards dinner, which is great. And then at the end of the summit two, we have another thing, which is something that people tend to quite enjoy, which is our investor experiences. We've got four great experiences, which we are looking forward to sharing with you. But the content, as you can see, is there. We're building on this thing as it goes. And yeah, that's really it in a nutshell. If you have any questions, I'm actually quite happy to engage one-on-one with you to discuss how we can partner going forward or share more information about this, along with my colleague Laura, who's looking after the content section. Thank you very much for your time. I hope it was informative enough and I was able to convey my message that I wanted to convey. But it's I get excited about this thing and I try not to get ahead of myself because it's on my show. But I would love to introduce the great man himself behind this, as well as some of our advisory board members as well. So Mr. Tomi Davies, over to you, and thank you very much for hosting and thanks for introduction, Jude. Take care, everyone.
Thanks, Yao. And now we call on TD, who will lead the roundtable. This is the awaited roundtable everyone has been asking about. So, TD, please take the floor and then you'll introduce the rest of the panel.
Okay, June, thank you very, very much for that. Good afternoon, everybody, and welcome to the AESIS 2025 virtual program kickoff. My name is Tomi Davies. Everybody calls me TD, and I am the Collaborator-in-Chief at TVC Labs. Now, this isn't just another panel. That's why I'm here. It's a real talk. I mean, I'm talking no filters, no fluff, okay? Just insights from folks who are actually in the trenches of Africa's startup ecosystem. What I'm hoping we get to do is actually peel back the layers. We're talking risk, misalignment, founder fatigue, investor frustrations, and yes, even hype versus hope. Now, let's set the tone for the rest of ASIS. Grounded, generous, and most importantly, honest. Now, I've got some amazing people here with me today, and I'm not going to tell you who they are. You know why? I'm going to let them speak for themselves. Whether you like it or not, I'm old school. So guess what? Old school says ladies first. So, Aisha, over to you.
Thanks, TD. I'll take it. Hi, everyone. Good to see you all. I'm Aisha Pandor. I'm a entrepreneur and investor. I co-founded a company called SweepSouth in 2014. Africa's largest home services provider. Really impactful, but also challenging business. So connecting home service providers, the majority of whom are women in Africa who are unemployed or underemployed, connecting them to households who need help. So a marketplace business, lots of great challenges that I'm happy to talk more about in sort of starting and scaling that business. We launched in South Africa, but scaled across and pulled back from a few markets on the African continent, including Egypt, where we acquired a business called Fulchedma over there. So some M&A experience as well. More recently, I'm based in San Francisco in Silicon Valley, where I founded a company called Pandora Health, which is an AI-driven platform that helps women manage chronic health conditions. And I am also an investor through my work with E4E Africa, where I'm a co-founding partner and currently a venture partner. So we're a fund that helps support African entrepreneurs who are using tech to build impactful solutions at scale. So lots of experience on both sides of the table. Yeah, very excited about this conversation and sort of sharing some of my own learnings and experiences and hearing from the rest of the panel and the audience as well.
Awesome. Next up, Bernardo's, Mr. White.
Wow, what an introduction. So Ben White here. I've been involved in the African startup ecosystem since about 2003. Founded VC4A in 2007. I think fun thing that a lot of people don't know is that VC4A was originally a network of volunteers. Was a volunteer initiative actually between 2007 and 2010, 2011. Just people from all over the world who were coming together to say, should there be a venture capital industry for the African continent? How are we going to build great, meaningful companies? And then in 2011, we had the opportunity to co-found AfriLabs, which now has, I think it's about 500 hubs that are active across the continent. Another interesting fact about AfriLabs and the hubs, they're all independent. They're all independent organizations that are part of the association, which is incredible. And then with my dear friend and colleague TD, Tomi, and many other outstanding individuals, we co-founded ABAN. I think it was around 2015, 2016, to also really see if we can bring the angel investing and local capital into the picture. And yeah, we just love our work and super glad to be here.
Fantastic. Thanks, Ben. Last but definitely not the least, Tamim, over to you.
Thanks, Tommy. Hi, everyone. Very happy to be here and participate in supporting AESIS, VC4A, and ABAN with this event and conference cycle. My name is Tamim. I'm one of the partners and founders at Seedstars Africa Ventures. We're a VC fund investing in Africa, and the reason I built this fund with my partners was the result of my frustration as an entrepreneur on the continent back in 2015, when I realized how difficult it is for founders in Africa, not only to access capital. I mean, back then, I think it was about 200 or 300 million US that were invested in VC. Today, it's about 2 to 3 billion. So there was like literally no money available on the continent, but that wasn't even the main problem. The main problem was that there was no ecosystem, like Ben said. It was very nascent. People didn't really understand what a startup was, what it entails. There was no support from neither public authorities or corporates or anything. And one of the reasons we built Seedstars Africa Ventures was to bring not only the capital but also a lot of that support to African startups. Very very happy to be here and take part in this panel.
Great. Thanks a lot. Now y'all have it. You know who's here. We're going to go through a couple of things today, but first, just to open up in one sentence, like, what's the biggest myth or overhyped narrative in African early stage investing today? Now, Ben, I want to start with you because your lens across multiple markets and networks gives you a wide angle view. What's one narrative you believe is distorting investor or founder behavior right now?
Well, one that I would love to tackle is venture capital doesn't work in Africa, and we need our own version of Silicon Valley. I think we need to get rid of this.
Okay, interesting. Now, why won't that myth just die?
Good question. I don't know. First, off, Silicon Valley is a single place. It's a valley, and we're talking about an African continent. So they're two completely different things. When you get into the ingredients, when you're looking at Africa's opportunities, the challenges, completely distinct. I think we don't want any version of Silicon Valley. That's not what our ambition should be. But I think the part that is also needs, I think, just more detail is that the venture capital model that Silicon Valley is made famous around the world won't or doesn't work in the African context. And I think it's just thinking about who is venture capital for, right? It's just a very small percentage of companies that actually have the ingredients and the DNA that will make venture capital successful. And the reality is that we have 99% of founders and entrepreneurs that are building incredible businesses that are incredibly meaningful and deserving of investment support, but are not of the VC flavor. And so how are we going to address that? And I think there's massive scope for experimentation, innovation, and to just expand the pools and the types of capital that are involved in the industry.
All right. Thanks. Thanks for that, Ben. Tamim, I mean, you just heard what Ben said, from your seat deploying capital across geographies. What assumptions are misguided about how capital is flowing today? You've seen it go from a couple of 100 million to over 5 billion. What's your thoughts?
Thanks, Tomi. I mean, I couldn't agree more with what Ben said. I think for a long time there was this belief that we needed to replicate in Africa the model that we're seeing in the States and in the global North, generally speaking. And I mean, I remember, I'll tell you a story when we were first pitching for the fund, limited partners and specifically some of the DFIs that are in Europe. We were pitching an investment thesis that was very different from the traditional venture capital model out there. And I know you remember very well, Tomi, because you were part of that story in the beginning. These guys, they were looking for, I quote, the next Facebook of Africa. And these might exist at some point. But I don't think that's the primary source of investable startups in Africa. And we were building an investment strategy where there was indeed a pool of startups that were very digital, very tech-driven, but with profitability in line of sight, and I can get back to this in a sec. But these companies have the potential to become unicorns, right? There's probably 1 in 100 or 1 in 1,000 that will become a unicorn. But at the other end of the spectrum, there's a bunch of companies that everybody's ignoring. We were calling them back then dynamic enterprise. We've abandoned this notion because people can't relate to what it is. LPs, at least, who are familiar with either private equity or VC. And so I remember very well when we pitched the DFI about our dynamic enterprise category, they were like, what is this? That's not VC. So what we were calling dynamic enterprise is basically a company that's active in a traditional sort of industry that isn't really sexy or appealing to most investors. And yet they're growing 2x, 3x year on year by applying either some light form of tech or some form of innovation in terms of process, for instance. And well, the reality is that this is the backbone of most African economies. We need to finance them, and we were very, very much convinced that while these companies wouldn't be able to reach the unicorn status, we as a fund would be able to get a very decent, maybe 10x, 20x return on those. Maybe not with a 1 in 1,000 or 1 in 100 probability, but with a much higher actually probability. So we were pitching a portfolio where, yes, there would be a couple of unicorns here and there, but the probability of that, the low probability of that, was compensated by the much higher probability of getting a sort of milder but still very good return. And it was very difficult for investors and LPs and DFIs in particular to put us in a VC box, which they had imagined to be the Facebooks of Africa. And I think this is where increasingly now the market is heading, realizing that VC in Africa is not exclusively about finding and supporting unicorns, but really about accelerating companies that are active in the real world economy, building sometimes brick and mortar companies with very large potential and VC compatible returns. Yeah, I think that's where we should try to funnel more capital currently.
Thanks a lot for that, Tamim. Aisha, so we've heard 2 and 20 doesn't work for Africa, and economic development is not what unicorns are about. That's sort of my summary of the first two punches we've received. As a founder turned investor, where do you think perception and reality clash most in our ecosystem?
Yeah, I mean, I think it connects to the points that Ben and Tamim have made, and I think it's this idea that maybe it's just about capital and financial capital, and so all companies need or the continent needs or regions need is financial capital, and it will things will work out. I think you need way more than that. And I see that, and thankfully, what I'm seeing is a trend of both founders being selective about the investors who they bring onto their cap table, who can provide more than just the financial capital, but also investors who have experience in investing on the continent, also recognizing that within their teams and networks, they need to support, they need to provide support in terms of experience, know-how, networks, market access, regulatory support if it's required. So there's just a lot more that's needed. I, I startups are difficult. They are really, really difficult. They're difficult in Silicon Valley. They are incredibly difficult on the African continent. It is by far the most difficult thing I have done in my life, and for some reason, I choose to do it again and again. I've finished a doctorate. I have 3 children. I've given birth 3 times. This is the hardest thing that that I've ever done. The failure rates speak for themselves. And so I think there just needs to be a recognition on both sides that just by virtue of what we're doing, it's incredibly, incredibly difficult, and difficult and complex endeavors require collaboration, often long-term commitment. And they are not going to be addressed through simple, uh, overly simplified solutions. And so when you commit to investing or building on the continent, you have to understand that by virtue you're committing to something that's going to be complex and really hard.
Hmm. Well, thanks a lot for that. 2 and 20 doesn't work. And
And the obviously the upside is there, right? I think the opportunity is incredible, and I must say that because we're early in the conversation, and I don't want to sound negative.
well,
And
just to add, I mean, sometimes people have laughed, but that is why my formal title is Collaborator-in-Chief,
yeah, absolutely, yeah.
because that's what I believe in. So it's really heartwarming to hear confirmation, from the three greats with whom I'm having a conversation. But let's sort of now do a deep dive into the challenges. I mean, what's keeping you up nights? The risks, what could go wrong, and the gaps. What exactly is missing? Okay. Because, you know, um, what's stopping early stage investing from truly scaling? I'm not talking unicorns, okay? Because what we're talking about here is economic development through growth. We've got the population growth rates. We all know that. Okay, we can see it. I take my country, Nigeria. We've got 5 million extra people arriving every year, and we've already got a couple of 100 million. So, are we too founder friendly or not enough? Where exactly are the founders consistently missing the mark? Because we've all dealt with founders, and Aisha's even one. Let's get honest. In fact, technically speaking, what am I talking about? We're all founders. Let's get honest. What does real risk look like in our ecosystem? Now, Tamim, you sat on both sides of the table again, just like most of us. What do you wish more angels or funds understood about the realities of actually building on the ground, from infrastructure to talent to what have you? But yeah, well, what's your take on that?
Yeah, no, thanks, Tomi, for the question. I mean, I think, yeah, I wish more investors understood, that building a venture in Africa is as much about, what I said before about operational excellence, about operational resilience, than it is about product and tech. And I mean, I can dive into a few items here, and I hope I mean, this is going to be helpful in explaining what I mean here, without being too generic. But most of the time in Africa, you're not just building a business. You're building the rails that the business runs on. And startups have to fill the infrastructure gap. It can be from logistics to payments, obviously, but also often like customer education. That's time and capital intensive. That's very much needed. If you don't do it, very often it just doesn't work. And most investors who are not or less familiar with the realities of the African economies or African countries where those startups operate ignore that. And back to the previous question, when you compare to the US, for instance, Silicon Valley ecosystem, you take that for granted that these things exist. And so a lot of investors don't understand that you actually need to build that to have a chance at succeeding. Another important point, I think, is about trust with the clients, right? Trust is a daily transaction. It's not something that's given. That very often in our markets in Africa, consumers are sometimes skeptical about the products that are being delivered due to poor experiences, resulting from large companies, sometimes public institutions, delivering poor services, if not no service at all. And doing sometimes that door-to-door onboarding, that hand-holding to sell. These things again take time, and capital that's not from within doesn't grasp that very well. There's another example. I mean, I can go on forever, I think, but I can give you a couple more. I think there's a point on talent. Unfortunately, because the startup ecosystems in Africa are still relatively recent. I mean, we're talking 10 years. I mean, VC4A, you guys started a bit before, but there was really not much back then, right? I'm sure you can relate, Ben. The resulting problem of that is that we don't yet have a PayPal mafia in most of Africa, right? At some point we'll get a Flutterwave mafia, right? But we're not entirely there yet. And so founders spend a huge amount of time training and upskilling early employees. And there's a shortage of mid-level startup-ready talent. And there's a real problem with leadership and high-skilled talent churn, right? And again, this is something that Western and Northern startups are able today to sort of mitigate, because there's a large pool of talent, so churn is less of a problem. But when you don't have such a big pool of talent, it's a real issue, right? So again, it's not about the product, it's about how you retain the talent and what you put in place to do that. And I'll just mention one last, which is really really dear to us. I think the many African founders run lean, and this is a great thing, and have profitability in sight much earlier than their non-African counterparts. It's not by choice, it's by necessity. They build durable, capital efficient businesses, because capital is not available. And they should be rewarded for that, not penalized for not scaling fast enough. I mean, we all wish that businesses could grow, 5x every year, but doing so without any sort of capital, even if you're running close to profitability, is just not possible. So I think these are just like four items which I think illustrate what I mean when I say that it's more about being very efficient in terms of how you operate, having this operational excellency in mind. In addition, of course, to having some form of innovation. Founders in Africa are very often creating the foundations for entirely new industries. And I think that requires a different set of expectations from investors, a different set of support means that we provide to startups, and also potentially different time horizons from an investor perspective.
Excellent view. Thanks, Tamim. I mean, you've covered a fair bit there, from infrastructure to talent. What I like, though, is something I already preach, which is the double-sided coin we're playing with on the continent, which is where, because you have to develop under restricted circumstances, it gives you an efficiency edge that you would otherwise not have. But a lot of people don't see that. And that brings me to my question to you, Aisha, because you've gone through this building SweepSouth, and now you're investing in others. The question is, what's a hard truth you've learned on how we can prepare founders to better engage capital? Because that's the other side of the challenge.
So I think one of the hard truths is just the honesty around this. And I, as a founder, naturally very optimistic, lots of hubris, have been guilty of including some of these things, just the overall African market TAM, for example. This looks super attractive. Look how easy it'll be on a pitch deck. And I think that, some of those hard truths involve being honest, both with yourself and potential investors, about the realities of the challenges, right? And the realities of what this means for whether it's, you know, market size or the time horizon when you're expected to make your ideal returns or whatever it is. But I just think, being honest, and taking a fine look at the realities of scaling on the continent. And then I wanted to also go back to a point that Tamim made, because I think this is important, and you spoke about in the context of hiring a team. But the reality is also that founders in a 10-year-old industry are also building, often without the support of other operators who have scaled. And I think it's something that's important to recognize, because going from 0 to 1 involves very different skill sets than going from 1 to 100, etc. And so that kind of like the grit and the being able to push through is very different from some of the skills that it requires to scale efficiently, to attract capital at later stages, and all of that stuff. And I think one of my favorite sort of a very illuminating book that I read, called The Power Law, pulls back the curtain on some of these practices in Silicon Valley, and where founders receive an incredible amount of support from people who've already built. And we should not be, I agree with you, Ben, that we shouldn't be trying to sort of cookie cutter Silicon Valley onto the African startup ecosystem. But I think that there are lots of things that I think we can learn from and transplant over, but also there are these secrets that founders, I certainly didn't know that, the amount of support that, for example, Steve Jobs, who's sort of the person who's seen as like this visionary, and he was brilliant, but he had an incredible amount of support from his very early investors who introduced him to networks, made his first hires, set out the strategy, helped him with market access. And so I think that's the other piece that we're maybe missing, is like, how hard it is for a founder in the context of having to build for the first time, having to build in the absence of experienced support, and then doing it where there's all, the infrastructure. SweepSouth, our first, we built, had an app for SweepStars, the women who work on the platform. Data is too expensive because although, our telcos are founded in South Africa, we have extremely high data costs, higher than many other countries on the continent, and people aren't able to afford data to access the platform, which allows them to get work. And so, okay, we have to build a data-free component into our platform. And then people don't have bank accounts, and you have to try and find alternatives to the traditional banking system. The payments doesn't work. And so we often have to work with other startups and build on top of what they currently have to accept, ongoing recurring payments without the need to physically be presenting a card. So along all of those challenges is also the reality that often founders in more experienced, mature markets have they have the support of people who've done this before. And I think some of that also just speaks to, regulatory changes and how we think about, foreigners and immigrants coming into the country who are experienced, and how difficult it is for people to get work visas and permanent residency and all of that stuff. So there's sort of a spectrum of things that need to happen to make this work.
Awesome. Thanks a lot for that, Aisha. Very good insights. I picked up a thing or two myself there. Now, and just listening to the talent discussion there, there's a new underlying factor that's come into it, which I'm sort of starting to get feelers about, and I call them the Trump returnees. So um, they're bringing with them a knowledge base that we historically didn't have, and what their psychological adoption to the ecosystem will be is one of the key things that I'm sort of watching out for as we move forward. And that brings us, sort of to the last straits of what if you could shift one thing in the ecosystem right now, what would it be? What LPs should really be asking fund managers, the role of government. We've got all these new startup acts coming, what to do, what not to do. I've just talked about, let's call them, for the want of a better word, diaspora returnees, you know, um, exciting new models, communities reshaping the game, for example, in ABAN, we've got, climate smart agriculture um, syndicate that's starting to make inroads. So from where you're sitting, okay, what's the one practical thing um, a founder or investor could do tomorrow? Um, Apart from, of course, they've all got to go to AESIS in November, but I'll park that for a minute. Um, and let me start with you, Ben.
There are a lot of different thoughts in my head from the comments that have been made. I would just maybe just very quickly adding to Aisha's input. I really wonder, where we are in terms of getting closer to this tipping point. If from my perspective at VC4A, where it started as a very small group, now there's more than 250,000 members. Um, Increasingly, these are individuals that have very impressive CVs with lots of experience, tangible experience, cutting their teeth on a lot of these questions. And what's, I think, very promising is that people keep coming back for more. Like Aisha, you said before, like it's so painful, but I keep coming back for more. And TD is just somebody who never stops, right? He's unstoppable. And there's so many people like this in our industry that just keep coming back for more. And they're coming back with those experiences and with the network that they've built up, and with all these knowledge and insights, right? And so this is being made available for founders that are coming up now in the ecosystem, and I think they've never had it better. I mean, obviously, it's a very different situation from 5 or 10 years ago. So, is it realistic to think that we're getting to a tipping point where a lot of this could get much easier, right? It's kind of like it's really, really hard at the beginning to get things going. And trust me, I mean, we all have the scars to show for it. But you get to a place where there's a momentum, things could also start, unraveling and moving in a better direction, much easier. So one point that I would add when Tomi, you're asking about, what's the one thing that you would change, or what's the one thing that could, really help kind of move things forward. I think this news that we got from Ghana, that has regulated their pension funds to allocate capital for the venture industry. This is monumental. Um, and if this, if the capital is going to local fund managers who will be deploying that, if we see the Ghanaian startup ecosystem make tangible progress as a result of having this kind of capital support, that can be an example or a benchmark for many other countries on the continent to start thinking about doing similar moves. And we need this, right? If the US, USAID, all the American affiliated capital and institutions, if they're kind of more going to focus on themselves and their own market, Europe has decided that they want to build an army, and all their money needs to go into making weapons. You have this basically withdrawal of resources, and the African governments, this is the opportunity to step up to the plate and to fill some of that gap. And it needs to happen, right? And so I think also one of the myths is that we can build this industry without the support of government. I think is just, in the beginning, it was easier to try and keep these things separate because it was not very constructive. But that's changing. That's changing now. And that's part of this tipping point that we're getting to. And I think it's super exciting.
Yeah, but truth be told, they've always supported. If you look at right from Demo Africa days, we've always had their support.
Yeah, it's true.
Yeah, and that brings me to Aisha.
Yeah, I mean, so what what kept on coming out as I was thinking about this session is like the importance of patience and understanding that this is a long game. And again, not sort of it's not something that I ordinarily have as an attribute, right? As an entrepreneur, as a founder, you want to get things done quickly and you're impatient and you want to be scrappy. But I think just recognizing that it takes time, and a decade is not it's not a huge amount of time to build a really strong ecosystem. Silicon Valley, just again as an example, not as something that we're trying to completely copy, but that it's a 75-year-old ecosystem. If you're going back to when Hewlett Packard was founded, it's maybe 100, almost 100 years old. And so these things take time, and we're very, very early in the game. So I think just recognizing that absolutely we're on the right track, hopefully close to a major tipping point. But these ecosystems take a long time to build. And then I think the second thing is just thinking about sort of innovative models, out of the box thinking. How can we use the attributes of Africans culturally, of our economies, of what we have to offer, of our key industries, to try and attract investment, interest, excitement in different ways. And so I think, yeah, like valuing the things that we have that are different from other healthy functioning, growing ecosystems, I think is also going to be really important. And it will take bravery, people sticking their necks out, not being afraid of failure. One of the things I hate seeing is the celebration of companies and founders that have failed, because it's completely antithetical to what we're trying to do, and to progress for everyone. So yeah, I just think, out of the box thinking, sticking your neck out, tolerance for failure while providing support. And then being patient and recognizing that, like all good things that are, built to last, it's going to take time.
Wow, thanks a lot for that. Um, One point on failure, because it's one that we gloss over a lot. And everybody knows 70% of startups fail. But we don't seem to accept that that's part of the business. And what founders look for is to fail forward and learn fast. And that's why I took the time out to celebrate a young man by the name of Dipankar Rostagi, who on the 28th of April, we closed a $20 million Series A round for OmniBiz. Why is that? Well, most people may not remember at the beginning, we started this whole thing in 2010, Ben, by the way, okay, tracking and everything else. And Dipankar was there. And those first few years, he was the darling of the industry as VConnect, because VConnect was the biggest bulletin board going in Nigeria. We got to 40,000 users a day. But guess what? We couldn't make money from it. So, guess what happened? 2017, eventually, we shut it down. He went to work somewhere else, came back about a year and a half later, says, I figured out what was wrong. Kolaino, Olumide, myself, all of us says, hey, this guy's on to something. And I just stepped down from the board from then. But he is living proof that, yes, it can be done. And back to Tamim's statement, this is not about unicorns. I've said this, and I'll continue to say it. Africa's startups are about economic development. That's what we need to focus on. Why? Because we're leveraging the growth to provide services that solve problems that are valuable to the locals. And that's why M-Pesa took off like a house on fire. That's why mobile telephony has the adoption rates it does. That's why fintech has become the focal point, okay, of investments. Well, let's wrap this up because we got just a minute each. And here's it. In one line, what principle are you personally committed to as you engage the ecosystem for the rest of this year? This time I'm going to start with you, Tamim. One liner.
Thanks. I think we will, keep looking at the deals we look at with a very African eye. And I think that means not putting entrepreneurs into the boxes that our own investors are trying to force down on us. Meaning that, this is not climate enough, this is not gender enough, this is not this and that. I'm not saying that these things are not needed, right? Especially the gender bit. But I think this is putting too much pressure on us, investors, and we need not to push that pressure again on the founders. Like you said, there are plenty of businesses to be built, providing goods and services that are in very high demand. You don't need to create problems and or invent problems to create solutions to respond to those sort of imaginative problems. So keep focusing on the entrepreneurs that are building for Africa, and irrespective of what that is my motto.
Thanks. Ben?
Actually, I read a sentence earlier today that was said traction is not structured readiness for venture capital, which is a sentence that just kind of hangs with me in this sense that um, basically there's an incredible amount of work that goes into helping founders get to a place that they can actually take capital and put it to a productive use. We talk a lot about something like due diligence, but that's assuming that all of the assets are in place to do due diligence. And that's where you quickly find yourself in a process of co-creation, figuring out what are the questions that need to be answered, what are the processes, the tools, the people, the channels that we need to develop to be able to put together those assets so that an investor at some point can come in and do the due diligence. And I think part of that as well is all these issues around governance. How do we help these founders build management practices and governance practices for themselves, but also for the organizations that they're building, where at some point they need partners, they need investors, they need all these other stakeholders to be involved, and they can only do that if the foundations are in place that make that possible. So all of this is kind of a key area of focus for the work that we do at VC4A, and where we just continue to build as much of sort of the infrastructure and the tools and the resources we can around this. Last statement. VC4A now has organized more than 800 technical experts that are available to any founder free of charge through the Mentor Connect platform. There's lots of.
I think we lost Ben. Thanks, Ben. Aisha, you have the last word.
I think just continued optimism. Like I think, I think there's something so great about the idea of building and supporting founders and companies who are building out of thin air, right? Like you just decide that there's a problem, a challenge that irks you enough that you want to spend, a lot of time and blood, sweat, and tears trying to address it. And so I think that continued sort of optimism, just from a mindset perspective, helping to encourage and support other founders, other builders, whether it's just through a peer founder or through the work that we're doing with E4E Africa, and doing it in a way that, as Ben says, is sort of gets companies ready with the internal infrastructure, the skills, the support that they need to get to that next phase of growth, and do it in a way that's sort of realistic. But I think, yeah, the apart from all of the headlines and everything else, I just think it's the most incredible thing to be doing, is to be building and to say like this didn't exist a few years ago, and now it's here and it's changing lives, and and people are benefiting from it.
Well, on that note, I would really, really, really like to thank the three of you for taking the time out and for being, open and honest about what you're seeing in the ecosystem. I hope the audience have found it useful. What I'd like for you to do, if you'd be kind enough, now we're going into Q&A. Aisha may need to disappear, but that's fine. Please put your questions in chat so that we can get it on. I'm looking forward to hearing what the audience have to say in chat. Please go ahead. Okay, Aisha's gone. Right. Well, Ben, you're still here. While we've still got you. One of the key things you mentioned there is really what Ghana's done with the pension funds. And it's something we've been advocating like forever. Is there a way Or do you think, just like if you remember when Tunisia first passed the Startup Act, everybody was like, it'll never last. And now, it's sort of it's starting going down. What are the potential opportunities to see, that manifest in other countries, or are other countries already looking at it?
Yeah, it's actually a very exciting space. There are multiple conversations running at the moment where, I think it's fair to expect that in the next, before the end of this year, hopefully, there would be an announcement that, to have kind of like an accelerator program for pension fund managers,
Hmm.
bringing these individuals together to better understand the industry, how it operates, who's involved, how they could also invest in a lot of the funds that are up and running, and to do this in a shared setting where these individuals are kind of guided through the process of, how would you engage your pension fund in investing in the African startup ecosystem. If something like this comes online, we could see, I think, an acceleration of sort of efforts in this direction, which would be huge. So yeah, I mean, there's so many great things that are happening, kind of in the background, that are, I think, going to have massive contributions for the space. It's just a really exciting period. The other one I think is that we're seeing right now, which is also really exciting, is a lot of LP support for country-focused investment vehicles.
Hmm.
And so you're starting to see many, many small funds, which previously I don't think were able to get capital support. Funds like 5, 10, 15 million are now actually getting those monies, and will be deploying within the countries where the teams are based. So you're starting to get much more density beyond just the big four markets. So these are all trends, I think, moving in the right direction.
All right. Thank you for that. There's a question in chat which I will answer before we shut down, and it is: what advice would you give to early stage founders who are building product but need infrastructure to unlock real growth, yet can't raise funding because they lack revenue and can't generate revenue without that infrastructure? How can they navigate this too early syndrome? Well, this is the classic chicken and egg trap for African early stage founders. Too early for VCs, too underbuilt for revenue, too unproven for grants. Well, first thing you've got to do is reframe the problem. Don't think of infrastructure as a single expensive foundation. Think of it as a sequence of unlocks. Ask, what's your minimum viable infrastructure? Yes, I said that. Okay. I need to validate one paying user. Can I fake rent or partner for anything that's expensive to build? For example, if you're building a logistics SaaS, can you white label an existing platform short term or offer concierge services manually? Now is Wizards of Oz MVP. Then, second thing is, look, when capital is scarce, revenue is your best investor. Do some high margin consulting, freelancing adjacent to your product offering. Then use this income to bankroll the real product. Okay? Most of us African founders, that's how we bootstrap, including myself. Yes. And you can partner your way to scale. Okay? You may not have infra, but someone else does. And they might need what you're building. Joint ventures with infra-rich players, whether they're telco, fintech platforms, co-working hubs, whatever it is, revenue sharing pilots with ecosystem enablers. And then you prove traction with signals other than revenue. What's your active user? What's the wait list for signups? Do you have letters of intent, partnership MOUs? So listen, what keeps you alive and investable is momentum. Weekly wins, new users, better product, sharper story. Start where you are, use what you have, grow anyway. I trust that helps. And on that note, I hope June is still with us.
Yes, I think there's one question to Ben. Maybe we can finalize with that. I don't know if Ben has responded.
No, yeah, sure. Very quickly. I mean, our Chari dot co is a great example of a company that has been expanding into other markets across the African space, and I think there's a huge potential for more of this. I think Tomi will remember when we used to have to try and convince Egyptians that they should come to AESIS. We're saying, well, we're in Egypt. We don't
We
have
lost
any
Ben.
relationship with it. And then you know,
I think we lost Ben.
Yeah,
Okay. Ben, if you're hearing, you can just respond directly to the chat. We lost you half midway.
yeah, we
Okay.
did.
Yeah, okay. Thanks, Ben. Thanks, Tidim, Tamim, and Aisha in absentia for a very impactful and insightful conversation. And we look forward to seeing you in Cape Town so that we can be able to further this conversation. I feel like we did have a very limited amount of time for such a very powerful conversation that we have had. And I think everyone should have taken something away that, and even as our theme says, build Africa built to last. We need to take measures of how we will be able to build a resilient ecosystem, and we also need to be patient. We don't have to apply what is working in the Silicon Valley, but we can try and build what works for Africa. And with that, I have good news for those ones who stayed to the end of the session. Our early birds tickets are now live. If you want to meet us in Cape Town, and we will have some goodies, and we have a great lineup of our summit activities for both leisure and education. We can sip wine while talking about serious stuff. So see you in Cape Town. Take advantage of the discounts that we do have for early bird members, and we also have a competition. We will pick someone and we will reimburse them their ticket back. Will it be you? And so it will be great to see you in Cape Town. And in case you want to partner with us in so many ways, you can partner with us for both the virtual events. You can partner with us investor meetups, and even for the summit itself. Please reach out to Yao. And also, Laura will be reaching out to speakers who would want to speak and have a platform at ACES. We look forward to seeing you in Cape Town. But until then, we will see you in the next virtual program event and in the investor meetup near your city. Thank you. Until next time, bye.
thanks. Bye.
Thank you. Bye. See you next
Bye.
time.
Thank you. Thank you all. See you next time.
Bye.
Thank you, everybody. Have a lovely evening. Bye bye.
You too. Enjoy.